Hey, Joe Phillips here with Stapleton Scoop and Focus Real Estate. And I'm here today with Matt Tenney, our go-to lender in Stapleton. And we are here in the Progress co-working space, and we're here today to tell you about the crazy low interest rates that are going on. So a lot of you probably already heard about it. Seems like it's getting a lot of headlines lately, but rates are extremely low right now, and we feel like we just need to do a little public service announcement to let everybody in Stapleton know that you might be able to save some significant money by refinancing your mortgage right now. So at Focus Real Estate, I have no incentive, no financial incentive. I don't care where you go to get your loan or anything. I don't make any money off of loans, but you could save some real money right now. So we just want to let people know. And I'm talking about like $40,000 potentially over the next 5 years if you refinance your rate from say a high 4s to today's current rates. Over $40,000 in 5 years. It's crazy. So anyway, I'm going to let Matt give a little bit of an outline of kind of what's going on with mortgage rates and walk you through some examples. So Matt, tell us what's going on.
Sure. So a little background. We're kind of seeing unprecedented low levels in interest rates, primarily due to the coronavirus pandemic that's been in the news. You've all seen it. That's kind of the catalyst that happened. I think the market is sort of primed for something like this. Stocks have been trading at all-time highs. Debt levels are extremely high globally. So something was going to happen that was going to cause this. Coronavirus happened to be the catalyst, but it could have been anything. North Korea, a trade deal blown up. So this just happened to be it. But it's resulted in extremely low rates. In fact, we're approaching the levels that I have not seen in almost 20 years I've been doing this.
Awesome. So where are they ballpark right now at a 30-year kind of rate?
Sure. So it kind of depends on your situation. Everybody's a little bit different, but rates now are kind of in that low to mid threes, depending again if you want to buy down or look at no cost options, if you're cashing out. Those are all different variables that affect rates, but again, really, really low levels currently, and it's really wise to start to reach out to your loan officer and ask about, hey, should I refinance? Does it make sense? What should I do?
So low threes as a comparison in early 2018, I know we were closing a lot of home sales with rates in the high 4s or almost 5% range.
Yep.
So even if you just recently purchased in 2018, this could make a lot of sense.
This could definitely make a lot of sense. I kind of ran some numbers just as a comparison. Looking at a $450,000 loan amount at, let's say, a rate in the high 4s, 4.75. If you were to refinance that same loan amount today, you would be saving about $357 a month in interest charges. In addition to that, you also want to look at amortization, and basically what that is the reduction of your principal over time. With lower rates, you're actually putting more of your monthly payment into principal and at higher rates in the earlier stages of the loan, and that is really the most important, as most people today don't have their loans for long periods of time. They're not staying in their houses for 30 years. We're really kind of looking at 5-7 years, and that amortization can be significant.
Okay. What about folks with private mortgage insurance, PMI? And that's when somebody puts down less than 20%, a lot of times they'll have private mortgage insurance. Right. So could some of those people be set to do a refinance and get rid of that?
Absolutely. In addition to saving on lower interest amounts, getting rid of PMI is also very likely, especially compounding the fact that interest rates are lower. We have seen rapid appreciation over the last few years. So if you bought a home a couple years ago and had to have PMI, there's a really good chance you have enough equity built up to go refinance, take advantage of lower rates, and get rid of your PMI.
Okay, perfect. That's huge, because that's just money that's wasted. So if we can get rid of that sooner, it's going to help you out big time. What else can people do with the refinances and the equity in their house?
Sure. So with that equity refinancing, you can oftentimes take advantage of lower rates and take equity out of your home. So if you want to renovate that basement or redo your kitchen, do some landscaping, or even pay off other high interest that you may have, loans, student loans, credit cards, things like that, now is a great time to do that.
Perfect. All right, well, I'm going to let everybody get back to their day, but Matt, where can people reach you if they want to just chat about this and see if it makes any sense?
Yeah, feel free to give me a call at 303-709-7501. I'm happy to talk.
All right, perfect. Thanks for your time. Thank you.